Good afternoon, everyone, and welcome to our overview of the VCT. I first met you all last year, and we were having a pretty good summer then, and then things rather changed, and there was quite a weak performance along with the rest of the market at the end of 2018. 2019, I'm glad to tell you, has been quite a lot stronger. Today we're going to hear later on from two of the recent holdings that we've taken into the trust. They are actually probably a little bit different from most of the newly qualifying holdings that come across our desks on a day-to-day basis. And Paul will be talking about more traditional qualifying, which actually not that traditional, as in early stage, more healthcare companies that we're taking into the fund, which are obviously riskier, but hopefully are going to offer some interesting returns into the future. So what I'm going to do is talk about really the composition of the majority of the VCT and why we feel it's in a particularly strong position. As you can see, the top 10 holdings are well over half the VCT, and together with the holdings 11 to 20, we're looking at 2/3 of the portfolio in some really quite established companies. And when I say established, these companies have an average market cap of over £500 million. 2 or 3 are hovering around the £1 billion level, and they provide most of them are net cash. Some pay dividends, and we feel that they offer some really good ballast to some of the more interesting and earlier stage companies that we have in the fund. And I also wanted to mention that sometimes we get asked why we're called Amati Global Investors, as if we do only invest in UK stocks, and that is really because a lot of the companies that we're looking at get a substantial portion of their revenues from overseas. The two that you're going to hear from today, Block Energy and Bon Hill Media, predominantly get overseas revenues. The calculations I did last week, it's only about 1/3 of revenues are generated in the UK. What's also we're seeing is that we would expect that perhaps that will even fall further than 1/3, as many of the companies, and some I'll talk about in the top 10, are using the expertise and the knowledge that they've gained in the UK and taking that knowledge and expertise overseas. I'd highlight stocks like Ideagen and GB Group amongst those. So just to talk about the biggest holdings, we've already mentioned AB Dynamics. That has really been a stellar performer. It's enjoyed a near tripling of its share price in the last 18 months. And despite having taken some profits on the way up, it's still 8.9% of the VCT. It's on the radar of growth investors well beyond the small cap arena now. It's got a market cap of over £500 million, but it's also seen as one of the rare shining lights, really, against a pretty bleak automotive sector. We'll have all seen the stories of reputational damage to Volkswagen, and there's been real onerous regulation, and now also the spectre of, and the existing trade tariffs that we're seeing. This company plays a really significant role in the development of new cars, and it provides testing technology for suspension and steering and all sorts. And what it really does is that it's an essential part of what the original manufacturers need for the future, whether they're producing another petrol-driven car or whether they're looking at autonomous driving technology, for which AB Dynamics provide testing to enable that to be developed. The second largest holding is the Amati Smaller Companies Fund. Now, this enables VCT shareholders to benefit from the best mid-cap and small-cap ideas that are represented in our Smaller Companies Fund. And we run that alongside the VCT. It's got some excellent long-term performance, and it just it enables a really good diversified base of holdings for the non-qualifying segment of the VCT. Keywords is number 3 and Frontier Development's number 5. They're both benefiting from the extraordinary success of the video gaming sector. Video gaming now generates more revenues than music and movies combined, and is a truly global industry. Video game developers, they outsource things like art and translation and localization work to companies like Keyword Studios, which has built up organically and by acquisition over the last several years. Frontier Developments has had great success with actually the creation of games, and they have developed games such as Elite Dangerous and Jurassic World. And excitement is building, perhaps not with you, for the release of Planet Zoo later this year. IdeaGen completes our list there. It's another buy and build story. They've knitted together software companies in risk and compliance sectors, and service end markets such as aerospace and financial services. As we know, risk and compliance is an ever increasing burden, perhaps, on our lives. And on those of companies. The revenues that they're generating have really started, as I've mentioned earlier, to grow outside the UK. And their chief executive has moved up to a chairman role now in order to go out to the US and find the right kind of companies that they want to acquire. I put some share price performance for these holdings on a graph. I don't know if you can actually read any of it, but the brightest line and the one that's gone up a lot, that's AB Dynamics, and this is over the last 18 months or so. And IdeaGen hasn't done a huge amount, but it's actually stayed incredibly stable despite the sort of wild ride that we've had on some AIM market stocks over the last few months. The next holdings are Learning Technologies, is our 6th largest holding. Talking of wild rides, this has certainly had one. It was at 67 pence per share at the beginning of 2018, and it hit over 150 pence before falling all the way back and then recovering this to, I think last night's close was around 91 pence. So it was one of the companies that fell victim to something that has really started to affect affect the market, which is short notes. They're written by independent firms such as StockViews and The Analyst, and they can have a profound effect on a stock's share price performance. What they'll do is they might highlight some very, a key point about the numbers that the accounting, for example. They might say that organic growth has been obscured by acquisitions, or there may have been an accounting standards change which is obscuring what the true underlying picture of the company is, and it can have, when stocks have done very well, it can obviously have a significant impact on the share price. What we aim to do in that situation is truly dig down and see whether we believe that the points being made by these analysts are correct. We do think that the LTG story is intact. We believe that organic growth should be fairly robust, but that one division does need to improve, and that's the contents and services division, the real sort of origin of learning technologies. And so we are watching that closely, and we're in good contact with management and analysts. GB Group is Also had a pretty volatile year, perhaps not quite so much as Learning Technologies Group. It's in a very hot sector, cybersecurity, and whilst it's quite an expensively rated stock, when you look at it against US peers, it's actually it looks pretty decently valued. And again, it's something that's growing by acquisition and organically quite significantly overseas in the US and Australia in particular. Craneware, which develops back office software really for US hospitals, has proved pretty resilient. It's a purely organic growth story, which makes it, even despite its quite rich rating, we think it's fairly well underpinned. Tristel has been fairly steady. It's looking to get approval. It does disinfectant for medical devices in hospitals, and it's looking to get approval from the FDA, which will be pretty significant for its US sales. And Block Energy, you're going to hear from in a little while. As I can show you on the share price graph for these holdings, Block Energy didn't do too much for the first few months of ownership, and then moved up very substantially when the news came from their test drilling of their fields in Georgia. So that's to just take you through the top 10 of our portfolio. These are the strongest contributors since the financial year end, so since the end of January this year. And we've discussed pretty much all of those, and you can see how strong they have been. This is data as at the end of May. The biggest detractors to share price performance, this is the less fun bit to go through. Accesso, they provide ticketing and queuing software, and were one of our leading lights last year. Their fall from grace has been pretty rapid and painful. It's probably true that shares had become quite richly valued over the summer of 18. We'd been aware for some time that they did use quite aggressive accounting policies, but I think it's probably fair to say we didn't think the shares would fall quite as much as they did as they came under attack from those worried about, the true growth rate of the company. They were subject to these short notes that I mentioned earlier. We knew we were effectively reducing our holding in Accesso at the merger of the two VCTs last year because only one contained Accesso, and that new weighting seemed to us to be about the right size. And actually, probably in the long term, it's, we have good high hopes for it over the long term. They are signing significant new deals. They've done them with Google, Groupon, Village Roadshow recently, and we do think they do deserve that position in the VCT, but it has clearly been quite a disappointing holding. PTSG, they provide lots of solutions for very tall buildings, really, access, fire, safety, and so on. They also had a very painful decline, but I'm happy to say that since these figures were struck, they've received a bid, and that would from Macquarie at a premium of 145%. So we're back up from where we started. Other weak stocks have been Hardide and Bilby. Hardide do surface coatings, and their share price was much weaker on some missed numbers and project deferrals. Bilby had also losses caused by two large problem contracts, but their new CEO is someone that Peter knows, our own Peter Lawrence. He has come from Ampario, and according to Peter, is a very strong operational manager, so we're hoping that he'll be able to get things back on track. Creo is one that has actually done very well over a longer period of time, well, the last 6 months before this since we took it until this year end, but it's had a pretty small decline, and it's one that Paul is going to talk a little bit more about. Right. And then finally on VCT qualifying investment opportunities, whilst the top 10 are obviously really important, we also obviously want to be looking at the successful companies of tomorrow. You might be able to see from this that we're seeing fewer deals this year. We're at a pretty similar run rate to 2016. I don't know if that's a coincidence because that was the EU referendum that year, and maybe it could be argued we're at another peak of Brexit uncertainty. So, I think time will probably tell. We've had some questions on whether there is any impact on deal flow from what's going on with Neil Woodford. We feel that, our policy of only looking at listed investment opportunities is the right one. And I would also point to the slides earlier talking about the average size, for example, of the top 20 holdings and how much they make up of the entire VCT gives us quite a liquid basis for our fund. Paul's written an article, which I think you probably have received a link to on email, and it is on our website, about the trying to clarify where the smaller companies funds stand, which is an open-ended investment vehicle like the Woodford Equity Income Fund, where that stands against on liquidity against the equity income fund that Woodford ran, to show the real differences and how much more liquid our stocks are. But it's also worth reading, I suppose, in reference to the investment trust. You can find that on our website if you haven't received the email. So that's an overview. I don't know if you've got questions for me now I can take, or whether I should hand over. Do you have any questions? Sorry, so this is on overseas. I meant that the revenues that the companies are generating are from overseas. So they break down around a third from Europe, a third in the UK, and a third from the US. Yes, it does help with a weaker sterling. That's right, yes.